Oh yeah, they did it. And JCPenney just filed bankruptcy after market close today. And let's see what's going on. This is Brian Lewis with MMT Investing. Things just changed. So I mean they've been having a tough time for a while. So I mean, if we look back, I mean they were headed down, and the crash started where? Here, around here. So they crashed with the crash about halfway, and then this was their bounce after the crash was just down, 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 down. And then they started negotiating their way out of bankruptcy over the last couple of days here. So the stock was jumping up, and we just got news that they did in fact file for Chapter 11, and this is where they are now, down here. So if you wanted to short this, you missed it. And this is not investment advice, but Chapter 11 is not the end of the stock. Like if they filed a Chapter 7 bankruptcy, that would be the stock getting defunct immediately. But Chapter 11 is a legal proceeding that's a negotiation with the lien holders. And so they have a couple months of back debt, and they haven't been paying their debt. And then now what they've done is they paid out $1 million parachute bonuses to their executives. Their workers are all furloughed, and now that they filed Chapter 11, the workers aren't going to get anything, and any money they have left is going to be owed to whoever they owe the debt to, so their bondholders. And I guess if they do go out of business now, it'll be the bondholders that take over the company and try to control the assets and sell them off or restructure the company or whatever. But at that point, this would go out of business. So generally, a company that goes Chapter 11 is about to go out of business, and they probably will. And there's some action, aftermarket action on this company here at 16 cents. It's pretty exciting stuff. So I would imagine that this trend is something that will continue for a lot of things in this kind of industry. So JCPenney was, I think it was like 1902 or something. I can't remember. I was looking it up a second ago. Um, but yeah, I mean, they made it through both world wars, Great Depression, all the crashes throughout the last 100 years, and not this time. And that's not because they're not like a recession-proof company or something like that. It's just this entire business model of selling stuff out of brick and mortar stores has been going out of business. Or not going out of business. It's been going out of style for the last several years as we're switching towards sort of Amazon, online shopping, Shopify, and these new shops that are coming out competing with the malls, basically the mall retailers. So we're going to see a bunch of malls themselves getting in a lot of trouble, the commercial real estate, and we're going to see a whole lot of these companies that just couldn't switch their business model over to compete with the online business. And now that we're going into a big credit contraction and they just have huge debt and no profits, and now they have to shut down for who knows how long. I mean, this could be an extended lockdown. And even if they come back to business, it's going to be restricted. So they just have no way to cover their bills, and the company might not go completely out of business. Maybe they can restructure and become a fraction of what they were that operates under, doing some online business and some restricted amount of store, but this is what they are now. Looking at going out of business. They're in Chapter 11 now, and their workers are furloughed. They can't pay their debts, and I don't really have this is not investment advice. I don't really have a move to do on this. Like, it should be another month or so before they have to miss their next debt payment and get in more trouble. So they have some time to do whatever they're going to do now. But this is what's going to be happening to a lot of companies, and it looks like we're coming into another wave of contraction in this cycle. And so this is what it looks like when a company can't pay its debts and when the business model, it just doesn't really make sense anymore in the modern society. Without the lockdown, people were shopping in these type of stores less, and it has been less profitable, and they've been less and less profit, more and more debt, and now that you get the contraction and the lockdown on top of it, it's just gonna knock companies like this out. So if you want me to go look up companies like this, please hit the like button to help me out with the YouTube algorithm right now. And I can look up some more companies kind of like JCPenney. This is one of the first big ones that has filed bankruptcy, but there should be a bunch of these coming. And I can go dig some of these up if you'd like, or I can just try to get news out quick when it happens. But this doesn't really help as far as stock trading to know that they've already filed bankruptcy. I mean, if you had been following this stock maybe and been up here in this area, you could guess that they might file bankruptcy and short that thing. But this is, I mean, bankruptcy generally is a sell-off type of situation, but this is no surprise. It's been headed toward bankruptcy for a while here, for months and months and months, even before this crash started. So there goes JCPenney, one of the great American stores. And yeah, and just the way that this works, it's just so ugly because, the execs get these $1 million parachute payments, bonuses, and then the workers get furloughed, and legally when they file, if they can't pay their workers anything else, they have to pay the debt, and they're in negotiations to pay the debt, and basically the debt holders control the company, and they're just trying to negotiate and restructure and keep the thing from going out of business. So it's just ugly, and this is what it looks like. And then we'll see who ends up in control of, the store assets and what happens to the actual physical stores, if they just turn into ghost towns and stuff after this, or I don't really know what it looks like when people stop shopping online, convert them into warehouses or something. But this is the change that we're going to be going through now. This thing just got accelerated big time, and that is a look at the future right now. Way more online shopping and way less of these mall stores, and then also just working from home more than working at the office. That's going to be a trend that continues, and cities are going to become less popular, and vacation spots and kind of rural spots should become more popular. So this is a shift. It's a shift away from big cities and big stores and big malls to online and more remote, just lifestyles. So that's just a general trend to keep in mind over the next, well, definitely over the next month or two, but over the next several years, that's a trend that's going to continue, and that's what the future is going to look like here. And these lockdowns can come on and off too over you know, we've seen places that go out of lockdown across the world, like Singapore and China, go on new lockdowns or shut down their borders again, and it keeps going in waves. So just like waves of lockdowns and waves of store closures, and goodbye to JCPenney. So this is not investment advice, and happy trading.